Hello, and welcome to another episode of Get Your Fill, Financial Independence and Long Life, where we explore ways to achieve those two goals. And we invite people on who can do a great job and help us. And that's why it's so great that Michael Allison's with us today. Michael is a financial provocateur. So he is the founder and CEO of New Lantern Advisors, helping people. Well, let's just let him tell us all about your new, now that you've defected from Boston, which I won't hold against you because tell us, Michael, how you're helping people who are kind of like in that place where they either feel like they're ready to retire or maybe they already have. And now they're like, okay, now, like you said, what's next?
Well, thanks, and Christine, for the chance to be with you today. I formed New Lantern after I retired from a 33-year investment management career in the corporate world, with the idea of working more directly with clients, not to join another big firm, but to just have a way to have a more direct impact on folks. And the idea. I actually don't work with clients. I work with fellow travelers.
I love that.
Because my ideal client is someone who's just like me, kind of, you worked, whatever it is, you had your own business or you worked in a corporate environment or whatever it is. And you kind of get to that place where I need to change. I want to do something else, but I don't know what it is. I don't want to just check out and go play golf and be bored. People, retirement can mean a lot of different things to a lot of different people. For me, it's a transition, and others, it's a transition to your next chapter.
Yeah.
And I also believe that after a very long period of very strong returns in the capital markets, the financial markets, I think that human capital is undervalued. And I think that's one of the other ways to think about what your next chapter is to continue to monetize that human capital in ways that are much more flexible than ever, And so that's why I think people that come in to this idea of retirement, it's not just an age, it's not just an amount. It's a transition to what do you want to do next. And if you are like me and others like me that sort of you had that period of time where you worked for a few decades in maybe a particular profession, maybe you have a family, maybe the nest is empty, and it's time, and you have now time to kind of focus a little more inward on what do you want to do next? What does that mean? What does that look like? And one of the things that technology and other things, including the aftermath of the pandemic, has freed people up to think and do different things and not be necessarily tied to a particular, profession, a particular geography. Just it's a lot more flexibility in the way that we conduct our lives going forward. And so having that part of the conversation to me is the really fun part.
Yeah, absolutely. I mean, I do interview people who are, they're 35 years old and they're retired or whatever. And I think to myself, 35 years old and what do you get 50 years stretched ahead of you to be like, quote unquote, retired, right? How much, as you said, how much golf can you play? So retirement has to mean something a little bit more than just, I'm just going to sit on my porch and rock in a rocking chair. Right. So and that's, I also feel like that's a hard thing for people to get excited about in a way. I mean,
Right.
it used to be, I hate my job and, I'm going to work there for 40 years and then I'm going to leave. And then, then it'll be time. I'll sit around and do whatever things I like to do that I never got to do when I was working. But to me, it's more like, I don't have to do anything I don't want to do,
Right.
but it doesn't mean I'm not going to do anything. Right.
Right. And that's a very important distinction. And that to me is what retirement is. It's the ability, now that you have perhaps fewer responsibilities than you did when you were younger, it's the ability to not do anything you don't want to do and to have much more control over your schedule and your day, and to just to have more freedom with your time. And that to me is the ultimate wealth, is freedom to do what you want to do, and freedom with your time. One of the things I help focus folks on is this idea of don't retire from something, retire to something. And what is that? What is your what's next?
Yeah. And how do you help people to determine that? Because a lot of people don't really know.
I think there's no single way to answer it. It's really more a conversation and a series of conversations. You just keep talking and getting people to think about it. You know, that idea of the three conjoined circles that we all saw in school or whatever, where, you know, what are you good at? What do you love to do? And what can you get paid to do? And the place where those three circles come together, that's what I told both my kids. My daughter graduated in 2020, tough year to graduate.
Yeah.
And my son is a rising senior in college. And both of them, when they went to school, I said, your job is to figure out where the three circles meet. Whatever else you do in college, that's, you know, if you want to be successful in college, walk out of there and have some idea what that answer is.
Yeah.
And so I think that helping people think in those terms is really the work when it comes to reframing how we think about our human capital.
Yeah. One of the problems I find with people when you're trying to get the answer to the first question, you know, what are you good at, is that I think we all assume that everybody else has our talents, but then they also have their own, right? So you think, wow, you know, I'm just behind, you know, or I'm not that, oh yeah, okay, I'm pretty good at that. But you don't realize that everybody else isn't also pretty good at that. So how do you help people to kind of narrow down? Do people come to you and they all already pretty much know what they're good at, or are you helping them all sort of define that?
I would say most of the time they have at least an idea. They may be wrong, but they have an idea about what they think they're good at. And, you know, and so that becomes part of the conversation. But it's, I think by the time one gets to that point, they've accumulated a set of skills, and maybe not just skills per se, but, you know, as we age, we accumulate knowledge, and that knowledge becomes something that kind of gets crystallized into a set of experiences that got you to the place where you are. And I think that's the real driver of the conversation. You know, kind of where have you come from? You sit here today and you want to make a change. You want to have some version. You want to have a transition. But what does that transition? What are you taking with you into that transition?
And then from that, so let's say that I used to, you know, I was a CPA or whatever, and now I'm coming into retirement. I don't want to do CPA stuff anymore, but like what kind of things, you know, I mean, I wasn't a CPA, but let's just have it like an imaginary scenario, like the kind of things you might ask somebody, or that you might help them to dig down to something else that they might love to do, that's still using their talents, but that doesn't look like their old job.
I would say that conversation could go something along the lines of you're an accountant, and accounting in a lot of different ways, you know, is everywhere in life. And so how could you use your accounting skills in a new application that isn't necessarily obvious?
Mm-hmm.
You know, I don't know how that might manifest, but getting someone to think about, well, I like to paint. You know, I don't know how good I am at painting. Me personally, I don't paint, but this is our theoretical person we're conversing with. You know, and is there a way to tie interest in painting with your accounting skills that you accumulated over the years? Can you apply that somehow? Maybe you're drawing, you know, graphs of things to help other people grasp accounting concepts. And you know, that's maybe an example of how to bring some of those things together, things you want to do, things you're good at, things you can get, you know, paid to do.
Yeah. When you're talking with people, how important, I mean, of course, this generalization, but the paid for it piece. I mean, are people, is that just sort of like a confirmation that what you're doing is valuable, or is this part of people's retirement planning, the actual that they would get reimbursed for whatever it is that they want to do?
For me, for me, the ideal person to talk to is someone that believes that that they still have talent and skill that's worth some monetary value.
Mhm.
And yes, that can be and probably should be part of the financial plan. But plan is a verb in this, in my approach, not an outcome or a thing.
Right.
So the planning is an ongoing thing, and lots and lots of people who are quote retired also now they have a consulting business where they make some money. I mean, that's the joy of being able to have the conversation with with yourself and your spouse or whatever, to say, okay, well, we want to make a transition. Financially, we're okay, or we're close to okay, but I've got a bit of a gap to fill. What do I want to fill that with besides Social Security? Um, you know, that becomes a way to think about how to continue to monetize and derive value from what you are capable of. Some people, work at the grocery store just because they like to be around people, even though they don't have to work.
Yeah.
But they take a job just doing something to be around other people, and that's a piece of it as well. So to take yourself off the playing field completely and then just kind of isolate, that's a tough thing, and I don't think what we're geared for as humans.
Yeah. But I would also think that if somebody starts working with you early enough and factors that into their plan, that they could potentially stop their day job, sooner, because rather than having to wait until they can completely support themselves in their retirement, they know they're going to have a little bit of income. So,
I would agree with that.
yeah. So who is I mean, you talked a little bit about your ideal client. How does a typical sort of first meeting with you go when you're starting to work with somebody who, knows that they want to do something really good and valuable, something that's going to really light them up when they retire, but they just don't have any idea what that might be?
Well, I think that no one wakes up in the morning and says, well, I should really go get a financial advisor, or a financial planner. Usually there's a catalyst, either current or anticipated catalyst, and that could be, I'm ready to leave this job and go do something else, or I want to start my own business. More and more people in their 50s, 60s, and beyond are starting their own business, partly to deal with ageism that still exists in the corporate world, where older workers get sort of looked over, but it goes back to being able to have more freedom and more control over your time. If you work for yourself, you have that. But the first conversation typically comes from someone wants to make a change, have a transition of some sort, and and that sort of is the reason that they want to talk to somebody, because there's the sleep at night component to all of that. Is you have those conversations at the kitchen table and saying, are we going to be okay if you step off this treadmill? And and so helping get that framing kind of dealt with, and think about, like, can we sleep at night if we're going to go ahead and do this? Or should I keep working for another 10 years and being miserable because I wanted to change, so I'll just stay there for another 10 years, what have you. So that's really the are we going to be okay conversation is really where it typically begins.
Yeah.
And then, that can take a number of different paths depending on whether their situation, their family situation, maybe their spouse is younger and still is working, so that provides an additional sort of cushion. And so there's lots of different paths that could take, but it typically starts with, I'd like to make a transition. Are we going to be okay?
Yeah. Yeah. And that's, So on your website, it says that you like to work with people who are, you know, ready to retire or they've just retired. So it's kind of like that's not necessarily age specific, right? Because a lot of people would say, well, by the time they're retired, it's too late to help them financially.
Yeah, actually, that's very much not the case, and that goes back to, um, you go through this accumulation phase where you're saving and investing and building up your resources, your financial resources, but then part of the transition that person goes through is going from getting a paycheck to writing their own paycheck from their investment accounts, right?
Right.
And so that goes back to the saying I said earlier: what got you here won't get you there. And so it takes a new approach to how you invest, and what I call it the three-headed dragon of risk. There's three components of risk. There's the confidence to take risk. That's also known as risk tolerance, and that's kind of where most advisors stop. They say to the client, well, and there's some behavioral psychology kind of quizzes that you can give the client to get sort of the score of their risk tolerance. But then, that's, to me, falls short. You also have the other two, which is the capacity to take risk. And that is really more of a life cycle question, because the most critical years when you're starting to take money out of your investment accounts, the most critical years are those couple years before retirement and the few years early in retirement, where you can't, think about technically, I retired from my corporate job on December 31st of 2021. So from a financial standpoint, the first half of 2022, if I was as exposed, personally, financially, as I had been in the few years prior, our kitchen table conversations would be not so fun. So there's a period where it's appropriate to de-risk, because taking money out of your accounts in the midst of a market pullback like we've had really does damage to the long-term financial health of the household. Right. And so there's that capacity question. Like, you really, even if you wanted to take risk, it's not appropriate that you do at this time for a while. And then the third component of risk is the compensation for taking risk, and that is, the relative value of various investments and the returns that they might get. So you have confidence, capacity, and compensation. Those three components of risk, and that kind of goes back to the drum that I continue to beat about undervalued human capital, and at least to a certain extent, after a 40-year bull market in financial assets, bonds and stocks and real estate, you have a secular decline in interest rates, which drove a very long cycle of very excellent returns for financial assets. And if you look at a really long map of history, there are periods of very good returns like we've had, and then the returns are not so good for a while, and maybe the market just kind of marks time for a few years and lets the economy catch up. And I'm of the view that that's probably a pretty good likelihood. But one of the things that has driven corporate profits is, excellent profit margins, and a lot of that's come at the expense of labor. Yeah. Not to get political about it, but it's really just kind of the relative value of labor versus capital. And that's another way of thinking about the inflation that we're seeing. And the returns to human capital, I think, are on the upswing. And that, to me, is another part of the conversation about don't sell your human capital short and just take it all off the table at the time when the ability to monetize that human capital is only going to improve for a number of years. And a lot of that's secular and demographically driven, because of just the labor shortages are real, and that's because of the aging of our population. And so I think people underappreciate how important it is to keep working, not only from a psychological standpoint, but also a financial standpoint. Keep working in whatever fashion that means. They don't have to keep doing what they've been doing. It's cool to do something else because you want a change and a transition, but it's not a financially wise decision to just all of a sudden take the value of your human capital to zero at this time. So I think it's the value of labor is on the upswing.
Yeah, absolutely. I know you walk every place you drive by, signing bonus, thousands of dollars just to, say that you'll work for these jobs that I think are kind of considered just very, low, not menial jobs, but jobs that don't require a lot of skill, like the type of job where they're going to, train you there, or I went by this furniture place, there to be a furniture delivery guy is like going to be, or gal is like $2,500 signing bonus. Like, gee, that's pretty good,
Yeah.
And it's probably not going to take you long to figure out how to do that job well. Right. So, but I want to bring you back to something that you were just saying, because I want to make sure that people really appreciate and understand, what you're talking about in your capacity, your risk capacity, because like you said, let's say that I need to have X amount per month. I need to have $5,000 a month, and the stock market just tanked. And so in order for me to get that $5,000, if I'm completely relying on my portfolio, I'm now going to have to sell a lot more. Right. Can you just explain how that
Right.
works, how you get forced into a situation where you have to sell really low, and how that erodes your value more than you might think?
That's a great insight, and that's really the key part of this, the risk management ethos of this firm. And and it came from many of the portfolios that I managed in my prior corporate life. Very much a risk management orientation, the idea of getting paid to take the risks, getting paid to take the risks that you take, and that goes back to the compensation of risk. But there's this concept of sequence of returns risk, which is a concept that, if you have a portfolio that is either static or you're contributing to in the accumulation phase of your life, then, when the market pulls back, it's going to come back at some point, right? But if you have to take money out of your accounts to live, and that's what the idea of a traditional retirement is, you have a certain number of expenses, and so you have to take money out. If it's a portfolio that is now worth 20% less than it was, and you have to take money out, then you're having to sell more than you would have otherwise. And at the same time, you've taken that now out of the portfolio. So when the market does recover, the body of the portfolio, the pool of assets, is smaller than it was because you had to take money out when the market was down. And so that 5,000, when the market is down, that 5,000 a month represents a higher proportion of the overall portfolio than it did before the market came down. And so that's the idea for, very important in the early years of retirement, to be able to just not take that kind of drawdown. You just have to have less risk in the portfolio. And that is like I said, that's bringing the investment experience that I do to this conversation with folks is to me the most value that I can bring. And that's why I've focused on the type of client that I do, which is you have to think differently when you're coming into retirement and you're turning off whatever external compensation was coming in. If you're going to take that to zero, then you have to think very, very differently about your portfolio and what you can do, the risks that you can take in that portfolio. Yeah,
absolutely. And since there's no real safe investment that's never going to go down if you have a pandemic, then, it's nice if you're in a position where you've got some other income and you can just say, well, okay, I don't really feel like selling, half my portfolio just to get my my living expenses this month. I'd rather wait, 3 months and just wait for them to rebound, right? It can make a huge difference.
Agreed.
What kinds of things are you particularly excited about in this firm? And it's sort of still a new endeavor for you. So what
Yes.
kinds of things are really, are there things that you're really enjoying that you didn't necessarily anticipate that you think that were as much or as rewarding as they are?
The freedom of time and to, create my own schedule is something that is really, really neat. But I will say that the pandemic, for my wife and I, the pandemic sort of gave us a little test drive about what it would be like to be retired from the corporate world. You're in the Boston area, as was I for 26 years. I took the same train to work for 25 years, except for when I traveled for work. But and so when they sent us home in March of 2020, and we started all working from home, I only went into the office 2 more times in the 2 years following that.
Yeah.
So and you hear stories about marriages that didn't do too well in the pandemic, because people were spending all their time together. Maybe they figured out they didn't like that person that much.
I know. I'd love to see the statistics of house size versus, how many
Yeah.
marriages, right? People in a smaller home may be more likely to like, you've got to go, this is not yet.
It's true, but fortunately for us, we really enjoyed spending time together and do today, and so it was kind of that's one of the silver linings of the pandemic for us, was kind of to see what it's like to spend that much time together. Because I used to joke about working half days. I would leave home to catch the train at 6:30 in the morning, and on a good day I'd get home at 6:30 at night. So
that's a half day. All right.
Yeah, it's a half day. So I went from seeing my wife just a few hours a day during the week to all day every day, and it was nice. We would celebrate our 30th anniversary next Monday. So
congratulations.
But yeah, so that part was that part's been neat. There's this idea was a few years in the making. It took a couple of different shapes in terms of what I thought I might do. But what I don't want to do is build a big company. I left that kind of responsibility in my corporate role. I had a big team, had a lot of responsibility in terms of looking after other people's money and, their hopes and dreams. Now I want to work with a much more select and smaller group directly. But the other more exciting part for me is to take some of these concepts of investment and risk management and that sort of stuff that I do for my own direct clients, and work with other financial advisors to help them do some of the same things for their clients. Again, this idea of a new lantern, a new way of talking with folks, and a new way of thinking about how you invest and the way it's appropriate that you invest. And so I'm working on some things to begin to offer to other advisors in terms of model portfolios and that sort of stuff too. And some education component to that too, because I used to run some pretty complex equity products, and being able to port those over to working more directly with clients in their own direct accounts as opposed to a big fund. That's been actually kind of a cool thing too, because we used to always talk about how great it would be if you started with a blank slate and you didn't have sort of the existing legacy business that you had to protect when you're trying to evolve and do new and innovative things. Yeah. Well, I had a blank sheet of paper. So a lot of the strategies that I used to work on, I now can do for you have to make some compromises because the numbers are smaller just from the implementation of it, but a blank sheet of paper in terms of the concepts. And the folks I've talked to, both my direct clients but also other advisors, it's resonating. It resonates. And so I think that's where my three circles are going to come together in this next chapter for me.
Excellent. Yeah, it's interesting, that you're when you can do that, when you're not thinking like, okay, where's my next meal going to come from? Like, how can I reimagine? And that's how, when you think of some of the new businesses that have started, that's what it is. It's like somebody stepped back and said, like, what's wrong with the way we get taxis today, right? What's
Right.
wrong with this model, or what could be better in this model? And it's fantastic, because I don't think retirement looks the way it used to for most people. I mean, certainly most people are not having any kind of a severance package. They're not having, right. They're not getting, no, I'm having a complete mental block, but when they used to pay you every month to be retired.
Yeah,
Pension, thank you. Yeah, I just couldn't find that word.
Traditional,
yeah,
the traditional, what they call defined benefit pension, which is where, you work a certain number of years, and so you're going to get X number of dollars a month as long as you live. That has been on the decline for several decades now. Very few beyond education and government kind of situations. The corporate world, very few of those plans are even offered. Now they offer what's referred to as a defined contribution plan, your 401k, that sort of stuff. So they'll contribute, they'll match, but you invest it and you take all the risk as the saver.
Right, exactly.
And hope that it all works out.
Yeah, and get hope for the best. And if not, well, hopefully I had a lot of rich kids,
Yeah. So I don't know who said it, but hope is not a strategy.
Right. That's for sure.
So, but that, sort of the pathway to the other side of that, includes, continuing to work in some fashion, but having the freedom to be able to reimagine what that work looks like. And I think that I don't have the statistic off the top of my head, but I read, that the rate of people who are in their 60s starting their own business is accelerating significantly for a number of reasons, which we kind of talked about, pandemic and ages and all that sort of stuff. But also it's people having a desire to have more control over their lives. And I think that that's one of the things that, those of us who got sent home from their, day-to-day corporate world realized that, I like the idea of collaborating, having colleagues, but it doesn't have to be 8-10 plus hours a day, 5 days a week.
Right.
We get the benefits of corporate culture with a lot less than 5 days a week in the office full time.
Exactly.
In my opinion.
Exactly. So true. So I have to ask this question just because, it's my thing, but what, if any, role do you feel like real estate has in a good kind of retirement plan? I mean, most financial advisors are like, no, thank you. But I feel like it's a strong, it's a viable option for people.
I don't disagree. I would say there's a couple of different contexts when you talk about real estate in that way. A lot of people are, especially if you've been in your house for a while or whatever, built up a lot of equity. A lot of people have a lot of their net worth already tied up in real estate.
Right.
It's not a positive cash contributor because you're paying taxes, whatnot, but you're living there. But there's a rent equivalent that you would have to pay otherwise. So, right. So that is technically an investment if you think about it that way. And at some point, you might, you'll sell it and move to a smaller place or, whatever the plan is.
Yeah.
So a lot of people already have a lot tied up in their real estate. And while it's technically not part of the financial plan, it is part of a diversification, if you think about that.
Yeah.
And then, you have in your other podcast, you talk a lot about real estate and income producing properties, and a lot goes into those. And there's the value of the property, the cost of financing that property, and the cost of upkeep, and then what you can rent it out for example. So I think from an income standpoint, it could be a good contributor, but it's like everything else. You're taking a risk. You're leveraging a property, and you want that property to appreciate, or at least not depreciate over time. And so that all kind of factors into the equation as well. And, we've seen real estate values go up a lot, as you know. And so it's easy to overpay, just like you can overpay for stocks too.
Yep.
So, that's all kind of part of the equation. It's also an illiquid asset.
Mhm.
So it costs a lot to, sell if you need to sell. It takes time. So, liquidity is a big component to that as part of the risk it goes with that. So I wouldn't say there's no place, but I think it needs to be thought of in the context of your overall household situation, including your own primary residence.
Yeah. Yeah. And I mean, it's true if you're getting ready to retire and you expect to sell that property and get a smaller one, but I discourage people from thinking of their primary residence as an asset because it's not making you any money on a
Agreed.
monthly basis.
Right.
Yeah. People think, oh, I've got all this money. Well, first of all, like you said, today you do, and next week you might not. And you have to sell it to get that money out. And you
Right.
also have to leave and go live on the street if you want to get that money out. So definitely have to think about it in all of its different aspects. But no, I appreciate that's a very good, thoughtful answer. So what other kinds of things do you want to share that I haven't thought to ask, or, things that are important for people to understand that I maybe just didn't even have the backstory to know to ask?
Well, I think that retirement is a concept that my industry kind of fed into over the last 40 years. This kind of arbitrary idea that once you get to a certain date or a certain number, then it's time to stop working. And that was in the best interest of my industry, because the more people saved and invested, the more people who do what I do would make in terms of their money, their earnings. So, but now as we look to the other side of that from a demographic standpoint, one of the most important things to me is the education component of what I do in terms of not just the planning, but the investing.
Mhm.
And one of the things to me is that's important is transparency and educating clients about what it is that I do, and taking the mystery out of some of the investment concepts. And so the education component is an important thing to me, just from a philosophical standpoint, but also demographically. It's very important to me and others that you think about both parts of the household, both if it's a married couple, for example, and in helping make sure that both spouses are well educated and comfortable with what it is that's going on in their portfolios. Because statistically, the wife is going to live about 5 to 7 years longer than the man. And one statistic I saw is that male advisors, and 86% of the people in this business are males, 7 out of 10 widows will fire that male advisor because what got you here won't get you there. And you have to have a very different conversation with the woman. And our kitchen table is a great example of that. My wife, thank God, my kids got her brains. She's very brilliant, but talking about our investments, talking about things so that she feels comfortable with what it is that we're doing. Even going into my own corporate retirement, the couple of years before that, there was a lot of conversations that it was appropriate that we have, because she, like we were talking about earlier, she wanted to know, are we going to be okay? And to me, that conversation is an important conversation to have more and more and more, because obviously it's important for the man in that relationship to have confidence in what you're doing. But it's even more important in my mind that women feel comfortable, particularly because of they tend to be on average a little more risk averse than men. And so really helping them understand about the risk mitigation techniques that go into some of the strategies that we deploy, and helping them not only feel confident that the risk is in hand, but also understanding how it's done. And so the education to me that's an important component to it as well.
Yeah, I was going to ask, like, I bet a lot of people, men and women, don't really understand what's going on in their portfolio. They don't know why they would sell something or buy it. They're just completely looking at you to answer that question for them, which is a problem if they fire you later and then, or their financial advisor later. And then they're just like, oh, I need money. I'm just going to sell this stock because random, alphabetically it came up first or something, you know what I mean? It's that people don't know. I mean, it's shocking how many people don't really have a good idea about how the stock market works and, why they would do one thing versus another. So yeah,
It's
definitely.
true.
Yeah.
And that's why we try to put a lot of content on our website. That's just really just kind of educational in nature to help people if they're inclined to learn, try to make that stuff as accessible as possible.
Yeah, definitely. Absolutely. Well, Michael, thank you so much for being with us today. I was going to say, is there anything else that you want to share, as we sort of wrap up today? Anything else that you wish I would have asked you that I didn't ask?
No, I think it was a really great conversation. I certainly enjoyed it.
Great.
I'm here to help folks. I'm here to have hopefully good conversations with folks, even if they decide not to do business. Mm-hmm. But I just appreciate the opportunity to chat with you.
Thank you. Absolutely. Me too. So Michael, how can people get in touch with you? I mean, we're going to put all of this in the show notes as well, but in case somebody wants to just jot it down now and just give them your info.
Sure. The website is newlanternadvisors.com. My email is mike@newlanternadvisors.com. And I'm on LinkedIn and on Twitter, but I don't use Twitter as much, but pretty active on LinkedIn as well. I'm that Mike Allison.
Yeah, I love that. Yes, I am that Mike Allison.
Yeah, the reason that, a bit of an aside, but the reason that I did that is that there's a very famous hockey player that played for 10 years for the New York Rangers from 1980 to 1990. And he's Canadian. His name is Mike Allison as well. And so more than one person has asked me, are you that Mike Allison? So that's where the LinkedIn and the Twitter handle came from. That Mike Allison.
Good. Yeah, there was a famous horse, jockey who actually won the Kentucky Derby named Chris McCarron. And so I was in high school. That was the headline: Chris McCarron wins Kentucky Derby. So I could have that too. No, I'm not that Chris McCarron. Cute. All right. Awesome. Well, thanks so much, Mike, for being with us today. And thank you, listener, for listening. I hope it's given you some things to think about your, how retirement can look different. And that means it has to act different. It means it has to maybe be financed differently than you might have been thinking. So give Mike a call and also share this podcast with somebody who you think might be thinking along those lines. And please be sure to be here next week when we're going to have some other great tips to share with you. In the meantime, have a great week.
Thanks, Chris.
Thank you.